Hi everyone, and thank you for tuning into my channel where I talk about stocks, the stock market, and investing. I post videos daily, so if this is something you want to get more of, subscribe down below. In today's video, I'm going to answer the question if Meta Platforms stock is a buy. I'm going to use my simplified 6-step framework to analyze this question. By the end of the video, you'll have your answer. All right, let's get right into it. The first step in my framework is the customer value. And for Meta Platforms, all of its social media apps are free to join and use, and free is an excellent value. Customers don't have to pay anything, users don't have to pay anything, so that's a great value. And so far, there's evidence that customers do like that. The Meta Platforms has nearly 3 billion monthly active users across its family of apps. Additionally, Meta Platforms revenue has exploded from 5 billion in 2012 to 118 billion in 2021. So Meta Platforms, if it's free to join, how does it make money? It sells advertising, and advertisers are clearly getting great value from their investments in advertising on Meta Platforms. Otherwise, they wouldn't keep adding money to their budgets because they weren't seeing return on that investment. So there's evidence that they're getting great return on their investment, and that's why they keep increasing their budget. In my framework are unit economics, and for Meta Platforms, these are excellent. All the content on its apps, or nearly all of the content on its apps, are user created. It costs Meta Platforms almost nothing. All of us all together post pictures and comments and do all of this stuff on their apps, and that's all free content that Meta Platforms gets to take advantage of, because when we post a picture, it creates engagement. Our family and friends go on to watch it and they comment on it, they like it, they click, they interact with the platform, and all of that Meta Platforms monetizes and earns money off of it by showing advertisements while you're doing those activities on the platform. And it's not surprising that a company with such excellent unit economics, its earnings before interest and taxes averaged 38.8% in the last decade. Excellent profit margins. The next step in the framework is the total addressable market. And advertisers spent $763 billion globally in 2021. So even though Meta Platforms earned $118 billion, there's room for it to continue growing in the ad market because the ad market is so massive. Meta Platforms is also investing, transitioning itself into a metaverse company. And according to McKinsey, the metaverse could generate 5 trillion in sales by 2030. So not only is it already participating in a massive market, it's transitioning and working its way into another massive industry longer term. Competition, well, it you can't get a lower price than free. It's Meta Platforms offers its social media apps for free. So does Snapchat, so does Pinterest, so does Twitter. There's a lot of free social media apps out there. It's a matter of who has the better mousetrap, who can attract users with the themes and the layouts and all of that stuff. And for now, TikTok is thriving. TikTok has the best mousetrap. It's growing the fastest. It's attracting a lot of user attention. And so right now, that's the biggest threat competitively to Meta Platforms. Valuation, Meta Platforms is arguably cheaper than it's ever been. And this is one of the more important steps in my framework is valuation. And Meta Platforms, according to its PE ratio and the price to free cash flow, it's trading at the lowest it's been in the last 5 years. And we could have looked back even longer, and it's arguably never been cheaper at a price to earnings of 12.5 and 11.7. Not only is it relatively cheap according to its history, but also a price to earnings of 12.5 and a price to free cash flow of 11.7 is cheap, regardless of how you look at it, whether it's absolutely or relatively. The final step in my framework are risks, and Meta Platforms has a host of risks, meaningful risk that it's facing. Apple has recently made changes in, I would say, started to take effect in the second half of 2021, where it makes it more difficult for Meta Platforms to collect data on its users. And in turn, that makes it more difficult for Meta Platforms to sell targeted advertising. Marketers like to buy targeted advertising because it removes waste, right? So if you're a vegetarian living in Miami, Florida, it's a waste to show you advertisements for a steak restaurant in Los Angeles, California. With targeted advertising, those types of wasted spending are removed because you can precisely target an individual in Los Angeles, California to show an advertisement for your steak restaurant in Los Angeles, California. So Apple's changes is making it more difficult for Meta to sell those kinds of ads, and that's reducing marketers' appetite to invest in Meta platforms. Secondly, TikTok is capturing people's attention rapidly, and that's coming at the expense of other social media companies, one of them being Meta Platforms. Collectively, these two risks and headwinds, macroeconomic headwinds, caused Meta Platforms revenue year over year to decrease by 1% in its most recent quarter. Its first ever, well, not ever, but its first revenue year over year decrease quarterly dating back at least a decade. Finally, Meta Platforms is investing aggressively to transition itself into a metaverse business, and those investments could prove to be wasteful. They've already allocated $10 billion and they're planning even more investments. It remains to be seen if those investments will pan out. That said, estimates indicate that the metaverse industry is going to be absolutely massive. So you could argue that it's worth it for Meta Platforms to take a shot at this industry. Still, it's risky. It could be wasteful. Okay, now that we've considered all 6 steps of my framework, let's look at the grades I gave Meta Platforms in each of the steps. The first step was customer value, and I gave Meta Platforms an A+. Free is an excellent customer value. Attracting 3 billion monthly active users is evidence that it's providing enough value to attract those users. The next step was unit economics, and I gave Meta Platforms an A+. All the content on the platform is user generated. It doesn't need to pay for that content. As a result, it's generating excellent profit margins. EBIT was excellent, near 40% over the last decade. So I gave it an A+ in that regard. Total addressable market, another A+ for Meta Platforms. The advertising market is near $800 billion annually, and it's taking a shot at the estimated $5 trillion metaverse industry. Competition, I gave Meta Platforms a B+ here, and you could argue that this grade should have been lower, but I'm giving Meta Platforms credit for historically beating out competition and having shown an ability to weather these types of storms in the past. TikTok is gaining steam and gaining momentum quickly, and so that's why Meta Platforms doesn't get an A+ here, but it counts nearly 3 billion people, nearly half the planet's population, as users. And so even though it's been facing competition from all sides, other social media companies, it's been able to withstand that competition. So I give it a B+ there. Risks, I gave Meta Platforms a C+ grade with regard to risk because risks are meaningful and they are hurting badly already. Revenue is decreasing year over year. It could get even worse with these headwinds. Targeted advertising, the inability to do that going forward is going to hurt revenue. And so risks are elevated for Meta Platforms. Finally, valuation, I gave Meta Platforms an A+. It's arguably cheaper than it's ever been, and it's absolutely cheap when measured by the price to earnings and price to free cash flow. Let's putting all of this together. Is Meta Platforms stock a buy? Yes, it is. Meta Platforms stock is a buy. The massive market opportunity, along with its excellent unit economics and excellent customer value, for me, outweigh the meaningfully high near-term and longer-term risks that Meta Platforms is facing. So there you have it. Meta Platforms stock is a buy. Let me know what you think in the comments down below. And if you liked what you saw, please subscribe down below. It'll help me create more excellent content like this. All right, I'll see you next time.
I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular Stock Advisor. Stock Advisor has beat the market by more than 250%. Go to fool.com/Parkev to get your 10 stock picks now.